you still like, in fact, you're advocating you should get into local currency, local government bonds, or Chinese bonds in general.
Chinese bonds.
Are you not worried about all that supply coming to the market?
Yeah, look, that's been backed up by MLF. So there was a medium lending facility, 1.3 billion, a trillion. Remember, it needs to get done by the end of October. So they're coming to market pretty quick now. All of the good provinces have issued, so we've got a couple left. Then we've got the sort of second tier, third tier provinces which are coming to market. They're still all issuing at 40 basis points. There's a bit of a switch going on within the banks. The banks are switching out of the governments into the local government bonds. We're seeing that spread compressing there a little bit. But at the moment, when you've got yields sort of up around this sort of 370 level,
right,
it's really 10 years, they're starting to look attractive to us again because they're not hiking rates here. They're still flooding the market with liquidity.
Yields, though, on higher rated, so non-investment grade, have started to pick up. And I'm wondering whether or not you think that the PBOC's injections, which I guess you alluded to there, has that been enough to actually alleviate and keep yields down?
Look, I think at the moment that's just helping out the credit market.
Okay.
The economy's still, from our perspective, slowing down. And we see a slower sort of third quarter and fourth quarter coming through. And for us, that means you've still got to be bond bullish. This has been the best performing local bond market in the EM this year. So we're up sort of 5.5 total return. So that's a pretty good bond market. We think you're going to still have a great year at the back half.
A lot of the supply is really coming through now. I'm just wondering, the structural inflows that we've seen into that bond market there, that doesn't seem to be in any way related to the currency weakness. Why do you think we're just getting so much money moving into the Chinese bond market since the summer?
Yeah, well, I think most institutional investors, sovereign wealth funds, central banks are coming from such a low base.
Okay.
Essentially, that most people are at zero. Markets open now, they're starting to make those structural allocations. So when they see weakness, they're putting money to work. Another thing to focus on too, which is probably in the background, is the oil contract. So we started trading the Shanghai oil contract, which settled in renminbi. What does that mean? Well, when you're starting to get paid as a Middle Eastern sovereign wealth fund, you're recycling back into Chinese government bonds, just like they've been doing for treasuries since the 1970s. So this is a big structural trend in the background here.